Good morning, good afternoon, good evening to those of you around the world tuning in for this wonderful webinar around MindBridge's AI Auditor for the Office of Finance. I'm your host today. I'm JC, or John Colthart, and I run our sales organization, and I've spent the last 20 years of my career working in and out of Office of Finance projects, in analytics-based projects, really trying to help businesses transform their current processes into more digital experiences, leveraging a variety of technologies. Here at MindBridge, I spend all of my time working with enterprises and corporations, as well as public accounting firms, to really talk about how we can uncover really interesting things going on in their general ledger systems, ERP systems, and other financial-oriented data systems. What we're going to do today is we're really going to have two main components of our agenda. We're going to talk about AI and artificial intelligence and risk identification in general. And then we're going to talk about how to incorporate this type of technology into your close processes, into various elements of your core business operations within the Office of Finance. As I said, when you look at the 20 years that I've spent in this industry working with a variety of different firms around the world, it always comes back to trying to manage the business. And managing the business can come in a lot of different ways. You can look at it in a lot of different ways. And really it's about, in this particular case, what we want to talk about is how do you use higher end analytics and artificial intelligence to really help you with identifying risks to your business. That can be in business continuity, it can be risk of errors, it can be risk of misstatements. And that really surrounds the whole close to report process. And so really, our goal here is to kind of create this level of awareness for you on why this is important and why now. So we'll start with a little bit of the why now. Really, at the end of the day, artificial intelligence has been a term that's been around for over 6 decades. This is a term that no one really understood or could conceptualize at the time, but now where we are is we would say that it is having a computer system augment what an individual is doing. Where people want it to go is the artificial general intelligence, where computers are actually thinking for you. But right now we're in the augmentation phase. We went from early systems that weren't really fantastic to now robust systems that are really assisting all different types of business operations, from marketing, from sales, and now entering into the core finance and accounting areas. In accounting specifically, there's been 4 sort of core disruptive technologies that we focus on in the last 5 or 6 years. And obviously one of them is a little bit further ahead in terms of leading the pace, and that's OCR, or optical character recognition. Now, why this is interesting is it powers other domains or the other application areas where artificial intelligence is actually being used. This is in things like robotics process automation. So what this type of technology allows you to do is everything from your mobile deposits in your bank account. When you get someone who sends you a check and you want to put it into your bank account, you snap a photo, your banking app takes that, digests it all, and pushes it into your bank account. That's what the OCR technology does. It reads all of the characters that are present in a PDF, in a document of some kind, and can scan through. So as you could imagine, this type of technology started early on at the advent of the fax machine and has been used in businesses more and more over the last 5 or 6 years, to the point where we would say that it's into late majority. Almost every organization is doing some form of scanning and electronic filing of their core business data, whether that's to be in a data room, whether that's to be invoices as part of your ERP submission and posting that journal entry, and all sorts of things. And as I said, using it in conjunction with other artificial intelligence techniques, maybe even doing robotics process automation, leveraging organizations like BotKeeper or Expensify or Concur, and all of these types of technologies that can take anything from a receipt and get right to your ERP and post it in. So that's one interesting and disruptive technology that we think is really important to keep an eye on. The others are also fairly mainstream in terms of the buzzword, but as you can see, they start waning in terms of where we are in terms of them actually being implemented. Cloud computing is still one of those big, scary items for some people. A lot of organizations are starting finally to move to private clouds, but the reality is a lot of the business operations data is already sitting in public clouds, whether you're using a customer relationship management tool or a CRM tool, whether you're using a marketing automation tool in your marketing side of your business, whether you're using, just even systems, core systems like email, Office 365, Google, whatever platform you might have, they're likely to be using cloud technologies. But really, the Office of Finance hasn't been as aggressive in doing this. We've typically had our ERPs or our general ledger systems sitting behind the firewall, in command and control inside business, on really bulky, hard to maintain and expensive resources inside the business. Only recently have we seen the advent of Intuit's efforts with its QuickBooks platform, moving out into QuickBooks Online, Xero, relatively new player, doing some great things in the accounting space for smaller, medium-sized businesses, and even the Goliaths like SAP and Oracle have started really making that transition to cloud. So it's there, and we're past the early majority, but it's still not ubiquitous in terms of what accountants are doing. Then we get the two least used, right? Artificial intelligence and blockchain. And I'll go to blockchain first, since the rest of this will be on artificial intelligence. And really, blockchain is an amazing technology for a lot of different use cases, but in some ways, it's harder to conceptualize in accounting. There's definitely a desire to move to that direction, but I think the early adopters in this space and innovators in this space are really going to be focused on other core business areas, the likes of a massive retailer in the United States using blockchain to know where the produce came from, right from farm to table, which customers have it, so that if there's any issues, they can automatically go and notify all of their customer base. That's a great use of blockchain. It's like custody of the transaction of taking that produce or that bit of agriculture right to the person's table, and if anything got contaminated along the way, it's a way for them to de-risk. Whereas in artificial intelligence, as I said, some people are starting to use robotics process automation, so a combination of technologies, including OCR, to do payables, to do expenses, automatic postings. But artificial intelligence, as it relates to the core Office of Finance function, the FP&A function or financial planning and analysis function, in support of the internal audit programs that you might have, or governance, risk, and compliance programs you might have, is actually quite limited, or has been up until recently. Now, when you hear artificial intelligence as well, we should sort of debunk certain amounts of the myth. Artificial intelligence is really not a singular thing. It's not a singular technology. It's really this idea that you can bring a lot of different technological pieces together and make a system that works in collaboration with the human operator and providing them insight. So an augmented intelligence system is really around bringing all those pieces together. So you'll hear terms today around machine learning, around deep learning, around artificial intelligence, and there are slight and unique differences. And what's great about this is that we're becoming more and more well-versed. It's not just a buzzword that says, oh yeah, I'm going to deploy that AI thing. We actually are now getting into use cases and showing people where that is, and moving from a black box buzzword to more mainstream elements. And I'm going to show you a couple of ways that we feel that this is really important for the Office of Finance. Now, I'm going to go back to, some of you will be members of your chartered accountancy or public accountancy bodies around the world. I always come back to this quote, which I found just really meaningful to why this is important today. We have to be willing to change our convention, to go beyond what we've done, the way we've done things, and beyond expectations and beyond our comfort zones. This quote has been used by Barry in a couple of different presentations he's done over the last 2 years to really talk about this issue of accounting and finance jobs are radically changing. If you look at the Report to Nations, which is part of the World Economic Forum, they put the Report to Nations out. If you look at their top list of jobs that are going to be irrelevant over time, it's payroll clerks, accounting clerks, bookkeeping clerks, even audit is in that top 10. And it's because technology is starting to really morph what that means. And the entrance of concepts like data science and further and deeper data analytics are becoming a much bigger thing in running your business and running your organization. So finance really has to kind of step into this and step into the fray, get out of their comfort zone of traditional monthly reporting processes where they're just looking at actual to plan or actual to budget and doing a pro forma to see where you think you're going to be at the end of the year, but actually you leverage technology to actually drive a wider awareness of what's happening in the business so you can make more informed decisions. Now, I'm going to segue into risk for a second here, and I think this is really one of the important parts about what we do over here at MindBridge and why we think this is important. Today, when you're trying to understand what's happening in your bookkeeping process, whether you're a small firm, big firm, massive multinational, it really always comes down to how you look at different elements of your data. And I'll use a simple sort of audit orientation to kind of get people's minds aware, because most of us that have been in finance have either been asked to, participate in an audit when an external auditor's come in and done something, or a review or something like that. But we also just understand the capabilities of understanding what this type of information is all about. So when we talk about looking at data, looking at our ERP data, our GL system, our payables, subledgers, it's really hard to assess that data in its entirety, right? What we typically do is we typically take a point of view and go and test for that point of view. Here's a great example of one in the audit standards. If you're thinking about this from an external audit perspective, go and look for any entry that ends in zeros or nines. And, you can go and run a report in your BI system or out of the ERP directly, grab that data, and you basically get a series of transactions, and it's going to be a pass or a fail. And so the prevailing wins would be, okay, well, all the things that fail are things that may be, something we need to look at. So then we further sample the, 3,800 or so that would be in this 10,000 record count. We'd have to go through 3,800 of those to find out if any of them are really meaningful, right? So our mindset is then, okay, well, how do we further refine this, and how would we actually debate and identify risk to our business? Well, normally we then go and say, well, there's probably other variables that we would want to lean on to actually start creating a better picture of what's going on in the business. So in our mental models, we'll typically then say to ourselves, okay, well, I've now got up the list of last three digits in zeros or nine. What other things do I care about? Oh, I might care about what's the highest dollar value in there, right? Because the highest dollar value could cause a bigger misstatement or a bigger error in our reporting processes. Okay, great. Let's add that in. Maybe we're worried about things that were manually entered into that expense category or revenue category that didn't come through a subsystem, right? Didn't come through the order entry system, didn't come through the procurement systems that we might be using or processes we might be using. Okay, so let's look at manual entry data. Then let's also triangulate and say, well, our business, pretty traditional. We don't do a whole lot of work on the weekends, so maybe weekend posting is something you're interested in. So what's good about this mental model that we create naturally when we're investigating data, you can actually replicate that in technology, right? You can write a whole bunch of scripts to go and say, okay, go and grab me all of these, last three digits in nine, also manual entry, also high dollar value, also weekend post, and you're going to move from 3,800 potential, transactions and entries to look at to a much smaller population of data. Now, when we think about using, artificial intelligence, how can it get any better than this? Well, think about what I was talking about. We're making these mental models and we're doing these hypotheses because, chartered accountants, public accountants around the world, and finance trained or oriented individuals like myself have always had this natural way of saying, okay, right, well, I need to filter this down to find out if we have any issues, and we just, we keep exploring. Well, you can actually teach a system to go and look for these things all at once. And not only that, you can ask the system to potentially go and look at things that you can't quite easily visualize. Like in this population that now might be smaller, say now 2,000 transactions, which ones are the biggest outliers? Which ones have the most rarity? Which ones are, just unusual amounts for those accounts, right? How do we pick those out? Now, given time, money, energy, I think all of us would be able to find a way to get there. But at the end of the day, looking at 2,000 entries or 2,000 transactions and all their subsequent paperwork is really quite difficult, especially when you're, 2 days pre-close and you're just trying to make sure that everything got posted on time and all the invoices came in and all the orders went out, et cetera, right? Really difficult to do. So how do you get that awareness really, really quickly and easily? Well, our hypothesis had been 4 years ago that we could use artificial intelligence systems and machine learning systems to actually go and take a look at this data and really get to that level of refinement of focusing agent, so that you're not looking at thousands of things, but you potentially are looking at tens or hundreds of things, sort of pre or post close. And so what ends up happening when you use systems that are incorporating all of those advanced rules, technologies, all of those, sort of more traditional analytics capabilities, and then start putting on top of it machine learning, looking for those outliers, those rare flows of monetary flows throughout your business, the strange or unusual transactions that are posted, that either have a rarity or literally are just a strange amount. You've got a telco expense of $100 a month, all of a sudden it's 2,486. That seems like it should be an outlier. That's quite unusual. It's never happened before in the history. If you're looking across all the history, that's something worth investigating. So by bringing all these things together, what you end up with is a much better sense of the data and the ability to actually go through and focus yourself, so that in that day -2, you're really swamped, you're really slammed at the end of the day, you're trying to make sure all the postings are there. If part of your job is to analyze and assess where we are, you can actually use a risk identification model like we have in AI Auditor to really filter out all the noise and really focus on just the things that matter, while at the same time knowing that there was this full coverage of assessing that data. So it's really quite interesting. It's a new way to think about things. And just to give you a sense, that data set that we were looking at is a real data set. It's a data set that we used early on in our workings with data and with accountants. And what we were able to assess was, a known piece of fraud. The systems that you would typically have used, or in that personal mental model that you might have used, would have taken you to go through, 2,000-3,000 entries to find things, either manually, or if you used a computer-assisted audit tool, you might have got there and said, oh, geez, there's 1,000 transactions I have to look at. Whereas using machine learning and AI on that exact same data set that allowed us to take all of those great rules, be additive and look at the statistical pattern of the data, and be able to use machine learning and other AI-based componentry, it allows us to now focus in and find that fraud in a very high degree of confidence that we're going to find the most interesting things. And if I was going down just a top-down list, we would have found that fraud about 90 times faster than sort of the traditional method, right? Because it's sitting there at position 18 versus, somewhere between position, 1,500 and 3,800. So this is a really interesting point of time where, how do we augment your time? How do we augment your team to be able to know that we're posting things where they need to be as fast as they need to be, without having to make major changes to your bookkeeping process? Well, you can deploy technology like this to get there. So why is this all important, and where do we think that the industry is going to have to go? Well, it's then now looking at this beyond the structured data, right? The structured data is the nucleus that you're pretty much always using. Now imagine all the other data that could be very influential in your close process to make sure that we can actually, attest, if you will, that, the financial statements on a monthly or quarterly or annual basis that you're presenting, to your board, to your senior leaders, maybe out to the public street. How can you define that confidence? And I think technology is what's going to take us there. Not saying that I think any tool is there to kind of help support you in this big of a cluster of a network of data, but if you can even just start getting to the 10%, getting to the structured, we think it'll be meaningful in the amount of time that you're using and how you're actually getting the job done. Now, we talk about this in terms of this idea of the golden thread of data. Really, at the end of the day, I think what businesses are going to transform to do, and what us as finance professionals and folks that have been in the industry, either as accountants or inside, the controllership within a business, is the idea that we can identify any type of anomaly or issue with our statements. But really, the ultimate goal is to really take that thread and go all the way back to, how did we get that data there? So that when we're then looking at future-looking forecasting, when we're looking at what's driving our business, we can actually identify those types of, contracts or vendors or customers who are, more or less likely to help us in our goals of being a more profitable business, higher growth business, whatever that looks like for you. And I think really what we want to see is, how do we get using technology to go all the way down into all the weeds of your data and produce you with a bit of a focusing agent to find the most relevant thing. Now, I've kind of gone through a little bit of a setup there in the first sort of 15 minutes, just to recap as we go into then, well, how do you incorporate this into the close process? The idea is that artificial intelligence is here. It's being used across a whole different set of things happening within accounting. ERP vendors are including it as smart assistants, bots, You've got robotics process automation tools that have come out to help us support, the payables processing or the expense processing within a business. This is just kind of like the next evolution. How do we then identify the risk of any of these things, making a misstatement in our business, or ensuring that we've captured all the right data and we've attributed it right, classified it right, so that our business looks as healthy as it's supposed to look based on the actual raw fundamental data. So what we're going to do is we're going to segue into this now. How do we actually make this happen? So, the question I always ask folks is, well, how often do you get involved in those internal financial audits, right? How often does your chief audit exec or your chief risk officer, ask someone within your finance department to get involved in the audit process? If you're in the controllership piece and actually managing the bookkeeping, processes for your business, it's probably fairly often. If you have external auditors coming in, it's probably very often that you get engaged. Some of you actually might have this as a job, right? You might be part of that internal audit and internal financial audit team that really digs deeper. Now, what I described in terms of building an AI-based system to define risk, I want to go back to the basics, right? How did we identify transactions or entries that we needed to assess? Well, in a traditional, computer-assisted audit tool process, you would have a bunch of domain rules, you would have a bunch of business rules that kind of also govern that, which might be spending limits or approval limits on the controls process. It might have looked at, some of the ones that I've already mentioned, right? Weekend post, manual entry. Was it part of my high monetary value? Is it getting flagged for that? And sometimes more sophisticated tools actually use statistical models, right? Examples of algorithms like, or statistical methods like Benford's Law, which is one that will identify patterns that just don't make sense to the traditional bookkeeping of your business, right? These are some traditional ways that people are doing it. But as I mentioned, right, you might filter initially on a certain one of these, and then you've got to go and kind of keep digging and keep digging and keep digging. I find that those are fairly inefficient, and they also have a limited coverage area because you're sort of focused too much maybe on one rule or one statistical model and not really letting the data really speak for itself. When we look at how that's then transformative in using AI in those processes, we look at it as, well, how can you then bring all of these pieces together with that weighted average score, with a solution set that is actually going deeper than the human mind has time for in a traditional closed process, right? Again, your day -5, your day -2, there's a bunch of workload that you're already doing, and verifying how close we are to actual to budget, or verifying that all the transactions got posted, or whatever your role is, becomes, the priority. So how do we actually get you to look at the things that might be more of a priority, like something is happening in your business that's going to cause a misstatement, sort of pre-close, and then make sure that you can follow it through and make sure that it didn't actually get posted or it got adjusted in a post-close scenario. Well, I think, we've got some tech that can kind of help you out here by bringing all those pieces together. So I'm going to flip into the tool, and I think that what you'll see here is just a way to start thinking about data differently and what you could use in your data sets to really make that happen. I've pre-logged in, I've brought up some data. We can get through that, at the end, just talk about the data that we actually pull in. But imagine, if you will, we've got the opening balance, we've got all the transactional details coming from the ERP, and we've got the closing or pre-close balance at that point in time. What the system will do is it will take all of that data, it will devour it, and it will start going through it line by line, right? What is happening in that transaction? I've got that telco expense of $100. I'm going to split that out between internet service provider and mobile phones. Gosh, I wish mine was that low, but it's not. But it's going to post to 2 different accounts, and it's going to obviously offset onto payables, and that's the transaction that gets posted, every month. So someone's doing that work. The system's going to read that and say, okay, I'm seeing that. I'm seeing that over time. I'm seeing, various, elements. Maybe you traveled, so it went up a little bit. Maybe you changed hardware, so it, again, went up a little bit in a given month. And then over the course of the year, if it was a single year you were looking at, or a single quarter, it'll identify those outliers. It'll identify those unusual things. You start feeding this system with, 4, 5, 6, 7, 10 years of history. Well, now we've got a great baseline to find out what's really anomalous. What's anomalous in what you're reviewing. And so what's great about this is it digs into all those entries, all those lines. how they're participating, looks at all of those things, and it creates a weighted average risk score. And that weighted average risk score is sort of like 0 to 100, as you would imagine. And we bucket the transactions or the entries into these buckets, right? High risk is over 50, medium risk is 30 to 50, and low risk is under 30. And so what you end up with here is a very quick focusing agent. I've got one transaction, one entry, 65 grand almost. It's in high risk. I can very quickly click on that, find out what happened, and I can triage at that point in time. Imagine that in pre-close. Hey, something just triggered for this particular period. Now, in this case, I'm looking at a full year's worth of data, and maybe I haven't run an interim or run a monthly before this. So now I've got a bigger number in the medium risk, and that should also be a little bit like, wow, that's a lot to potentially look through. Now, just because something's high risk or medium risk or even low risk doesn't mean there's actually an error, doesn't mean there's actually something more nefarious going on, some intentional misbehaviors. What it means is the system is looked at, in the case of general ledger and looking at common postings, 28 different what we call control points or identifiers, potential risk identifiers, and it's summarized that weighted average score of those 28 and said, okay, this just needs some attention. And over time, what you'll be able to do is you'll be able to go from looking at everything potentially, or looking at many of the things, really to be focused on, okay, here are the parts of the business that we really want to spend time on. So don't worry about how big those numbers look at the first time you run this. It's really about identifying a baseline. So we've got a few dollars here, probably worth looking at some of those medium risk. So let's try to dig into that. What does that look like? Well, we can look at it over time, and we can recast the data, to very just specifically look at, the last 12 months or whatever sort of time horizon you have. And we can also look at it from where in the business are these things happening. So this risk burst that you see here is now showing me my accounts rolled up to, sort of a level 4 of detail, right? So assets down to trade accounts receivable, or whatever you might have called that in your business. And it's showing me this really rich green number, or shading, and it's showing me the values. So there's $38 million of AR that's been processed in the current period, and that I'm reviewing, and it's really rich green, which is fantastic. It means low likelihood of there being a risk. But if you can see, my expenses starts out okay on an aggregate basis, but as I dig into my my OpEx, I see a lot of different things that just don't look quite good, because that shading is going from that rich green to a bit of lime green to this nice yellow, whereas liabilities just starts off being kind of negative and ends up there. There's a little tiny slice in revenue that I might also want to look at. In this case, as I hover over it, it's $1.2 million in refunds in contra. Now, at any point in time, I can pick any one of these slices, and I can actually drill into more levels of granularity. And what this will allow me to do is, again, think of this as helping you focus, right? You've got minimal time in those last 2 or 3 days of the month. You're getting ready for a close. You've got to then process everything. You've then got to sum it all back up. You've got to verify it if you've got multiple joint ventures and other legal entities. You've got to consolidate it all. There's just a whole lot of mess going on. So how can we focus you to the most interesting things in your business that are potentially causing you some concern? So right away we went from that high level view into a view by account, and now we're down into those actual transactions that have been created against the business, against the GL. And when I dig in one step further, so 3 clicks so far, I now get to, why is this thing a little bit different than everything else? And it shows me it's part of the top 2% of my ledger, configurable. You want to look at the top 1%, top 5%, doesn't matter the system, you set it, it goes and does the work. Weekend posts is showing me that these were posted on on an outside normal business hours. Now, most businesses, let's be honest, we're mostly 24/7, so it's a little bit rare that we really care about weekend posts. But at the same time, you might have parts, certain expenses, certain line items, certain asset classifications that that team doesn't work on the weekend. So it might make sense to actually filter in on that. And then you start seeing some things that have high next to them and low next to them. This is where some of that AI system is coming into bear, and actually specifically talking about the components of an AI system, machine learning. So we've got a whole bunch of machine learning algorithms that help support identifying potential risk areas. as you can read the titles, you know, rare flows, flow analysis, outlier, expert score, unusual amount. Like these machine learning algorithms and these helpers are identifying some very specific characteristics about your data. Now, I like to always give people a bit of a scenario like, well, what are you talking about here? How does this actually make sense to me, and why do I care? You know, I went from a moderate level of risk and I'm now looking at a transaction. Great. What do I do with all of this? Well, here's a couple of things to think about. Think about something like an outlier. When we're working in Excel, when we're working in a spreadsheet tool, right, it's easy to just scan up and down, sort it from highest monetary value to lowest, you know, sort it by, you know, account, whatever you want to do. It's really easy to spot things that look like they might be anomalies. But what you may not be seeing is how anomalous are they, or how much of an outlier are they compared to everything else that happens either on that entry or to that type of transaction or to the individual account. And that's what a lot of these machine learning algorithms are doing, right? They're kind of coordinating. So again, back to my story. So I come from a little small town. I grew up just north of Toronto. We had about 1,200 folks when I first went to grade school, right? So 1,200 people, not a lot of people. We had a farmer's market in the town square at the weekend there. And there was this wonderful lady who, you know, was kind of known by everyone. Her name was Patty Patricia, and she, bar none, in the region, again, small population here, you know, she had the best butter tart. So you could go into that farmer's market on pretty much any day and ask if that person knows Patty. And if you got 98 out of 100 people that you polled, then the 98 people who know Patty, they're obviously not the outlier. The 2 that don't know Patty are likely the outlier. The inverse being the case that if, you know, you're just walking down that same farmer's market and you say, hey, do you know Tom? And, you know, only 2 people know Tom. Well, Tom's probably one of the anomalies, as well as those, you know, those 2 people that were, you know, saying, yes, I know Tom, right? So this is the type of thing that this system does. It digs in and it says, what is different about this transaction? What is different about that transaction? What is it different about this type of scenario? You know, are we capitalizing expenses correctly here? Does this look normal for this business? And here's the thing, every one of your businesses, I've worked with probably, I estimate probably 400 different CFOs around the world on different types of projects in analytics. At the end of the day, every CFO I've ever met says, my business is different. And they're 100% correct. Now, they might be in the same industry, they might be relatively similar to the next, and I'm not saying Coke and Pepsi are the same thing, but what I am saying is most business operations and finance are pretty consistent, with the fact that they're consistently inconsistent, right? How you treat your accounting system, how you set it up, the type of accounts you use, the way that you set those accounts. You know, if you're using a generally accepted accounting principle, like a GAAP system versus an IFRS system, right, you actually have a lot of latitude in either one of those to make your business work. So what the system does is it looks at you and your business as its own individual entity. It then uses the amassed experience of things that we've learned over the time, you know, in different types of scenarios in our expert score, and we now layer that on top. And what we're looking for is those unusual things. We're looking for the people that don't know Patty. We're looking for the, you know, the people that know Tom because they're an outlier. And we had a great example of some, you know, amazing finds within our customer base. You know, we had a firm who was doing a bit of a, you know, internal audit review sort of scenario, and you know, they found I think the number was 13 different payroll checks going to the same address through this type of system. Now, how would you find that, right? How do you find that needle in the haystack that the address on, you know, these payroll checks is, you know, going to the same address? Well, you could go to the HRIS and you could, you know, go line by line, but usually when it hits the books, you know, you may not see everything, right? It just may not all be visible. So how do you look for those anomalies? Well, that's an anomaly, right? Out of all your business, you've got 13 going to the same place. So this type of system is really neat because it's going to pick up those kind of unique things. Now, the good news is it was because, you know, this was like a, you know, an accounting, it actually was going to an accounting type scenario, or not accounting, a resource like a, you know, a manpower type business. That was the address. So it was people who were working, you know, part-time casual and, you know, wanted all of their checks to go through to the, you know, to the recruitment agency. So not a bad thing, but interesting, anomalous, and definitely different for the business. So some really neat things can happen when you start looking at these. So let's go back to that overview and let's talk a little bit more about why this is important sort of pre and post close. Again, as I said, you have the ability to really dig in on any level of granularity of detail. You're able to slice through this data over time and really recast it. Now, some of you have used analytics tools. Most firms, big and small, have got into BI maybe in the last decade or so in a big way. And some of these tools are available. But what you don't have is that risk profiling of the data, right? What you don't have is the other sort of uniqueness that something like AI Auditor brings to you and to your data. It also probably doesn't consolidate it to be able to go and look at, control systems, right? Whoa, this looks really kind of crazy. Like I've got a whole bunch of user IDs here, and I've got a few people that have higher degree risk. Now, with the more data you give us, whether it be with people's job codes or whatever you might have, you might be very easily be able to tell, okay, Federico, that makes sense. He's one of the controllers in this part of my business, in this division. He's going to have higher degree, risky transactions versus, oh, I'm really surprised that Lisa has a bunch because, she's in, payables processing, shouldn't have that many difficult things. Her portfolio of what she does for us in finance, isn't a big deal. So again, the whole idea of the system is focus, 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 right? Leverage technology to augment you. You have very limited time. Typically, you're looking for needles in a haystack. Did we post everything? Is everything in the right accounts? Are there any risky transactions here? Did we miss things? Did we not? Like all of these types of questions can start being asked by a system like this by just feeding it all that data, letting the system then say, well, here are some outliers, here are some things that look anomalous or look very strange compared to the rest of your business. So I picked on Lisa there, it drills me down and it shows me, wow, yeah, that is kind of interesting. She normally doesn't deal with credit as an example, and those are the first two that have the higher risk score. She's also, got a couple of other credits, down here, which are slightly less, but maybe this is not part of her job remit, right? So very quickly we can kind of get into those details and find out what's happening within the business when you look at the risk. So that's one area, right? How would this impact you? You can now have an overview. You can look at it by account. You can look at it by your user control. I'll flip into payables in a few minutes just to show you a couple of other ways you could look at the data. The other thing that this system does, amazingly well, is it also gives you the ability to check your financial statements. I'm sure you're using a tool that's rolling up all of your data and you're presenting your financial statements. What this system does is it will actually take your opening balance and it will recast all of the summary points, across time and make sure that we can see, if that balance sheet or income statement is now still consistent, right? So imagine if you have this automated way where the system is checking some of those other tools you have and making sure that all of the data is appropriately classified. That's what this system does. When you first load data in, the very first time you use it, you can kind of map your data, you can bring in your chart of accounts, you can, roll it out. The system will actually tell you, hey, you added 15 new accounts and this is where we think they go in your income statement or balance sheet. It'll actually do that work for you. It will then create those balance sheet and income statement documents for the divisions or for the departments, whatever you're loading here, and it's going to then give you that ability to actually compare. Hey, end of period is supposed to look like this. I'm looking at our other reporting system and it's telling me we're off by some number. Another great way to just refocus your team, right? Let's not let them do all of this manual grunt labor work. Let's actually push them into something that can actually do a lot more of that ticking and tying for you. Now, all this is fully drillable. You can go kind of up and down, look at all the different transactions. But what I want to do is actually scroll down a little bit and show you something that's really quite unique about the solution. So the solution kind of incorporates a lot of different capabilities, a lot of different ideas and concepts that you would expect to have in your systems. And this is one that's sort of sometimes a nice to have, but I think is becoming very critical. And that is that when we process the data, the other thing that we're immediately doing is we're actually, when we have enough data, when we have enough history being processed, we actually go and hunt for anomalies in your ratios. Now, we have a default library of them, what you would expect to see, but you can actually configure these types of ratios however you want. So you can actually look at any type of mathematical equation of your accounts and your hierarchies and look to see, are they trending correctly? So if I just look at this one here, SG&A as expense as a percentage of sales, I can actually remove some of the noisy periods, remove the previous 3 years and just look at the last 2 years, so 17 and 18, and then they predicted forecast out through the balance of the year. Now, if I just take out 17 again and make it a little bit bigger, you can see that I've got a couple of anomalous periods, looks like February and then July, where that ratio over the course of that month is outside the expected range. Now, one of them's positive, one of them's negative, meaning, one is under what the threshold is, one is higher, depends on the ratio you're looking at, but that's really potentially quite useful information. Now what you can do is, you can see I've got a little chat icon here. Now the other thing we get to do is, once we see these things, we can actually use this as a conversation tool. So I can reply to Stuart and say, yeah, you know what, we need to raise this, we need to add some information, let's go look at which division it was, right? And now Stuart's going to get some feedback, and now we have this ongoing dialogue. So it's not only in a tool that allows you to be really hyper focused on potentially risky transactions and anomalous transactions within your business. It's also a communication vehicle to actually bring everyone to the same focal point, looking at the same data all at one time, which I think is really critical when we think about how fast-paced the close is, and we're looking at these things, right? It's not uncommon for your CFO or whoever you report up through to be really worried about some of these core metrics to the business, and the tool will just do it. Now, I may have underplayed just how important some of this is, so I'll reiterate another piece of this. This predictive forecast would usually take most businesses a long time to create those types of models. We use one of the most state-of-the-art predictive algorithms to really help us through this. And what's amazing about that is it's running all the time. The minute you load data, this thing runs. It will go and look at the data that you've provided. It will find those anomalies in those outlier periods, and it will recast all of the data for you. So it's one of these things where you can kind of set it and forget it. And every period, just look at it and make sure, okay, yep, we're still on track. Yes, we're still on track. Yes, we're still on track. And I think that's significantly different than most tools where, a lot of firms end up having to, go to a business analyst or maybe an IT analyst who then has to go build some stuff. This stuff comes right out of the box. And I think that's really critical to helping you, get through those issues of time. So I've kind of belabored that point a little bit. So we've got all this trending. We've got all sorts of great reports, various levels of balance checks, various levels of looking at the financials in various different ways. Again, I said you could do all of that annotation. Now let's look at a little bit more data. Let's go and look at some some vendor-based data. Potentially, you can basically look at any data that's available. You can see pre and post close. So we have this thing that will take an interim period. You'll be allowed to roll it over, and then we'll give you other checks, right, which allow us to see, well, did anyone go back and backdate, a prior period transaction? Did the risk profile of my business change? But of course, we may want to go and look at payables or receivables. We may want to go down into a certain level of detail and look at, which vendors are causing challenges. Now, this is a very small sample data set just for fun, but the idea is this data is, very much there looking for the right things. This has some very new types of control points. It's looking for vendor flurries. It's looking for high frequency posting of amounts or invoices. So you can actually interrogate, your vendors, your customers, find out if their behaviors are changing. Again, when we look at, pre and post close, when we look at the quarterly reporting cycle, the annual reporting cycle, helping be prepared for audit. I mean, there's so many different use cases here that, that this would be potentially relevant for. But the key is the system is doing it with your help, support, guidance. And every single one of these, you can obviously create further and further details to be able to go in and say, right, I'm looking at this transaction, it's very strange, it's duplicate, whatever these are. I can then go create a task for Stuart to actually go and work on these things that I want followed up. The system also has the ability for you to kind of mark things so that you can go back and review and have a report that says, show me everything I've marked as normal, so that you can do review sequences across your team as well. So some really easy to use features, which we think are really going to drive a lot of benefit to teams looking to enhance their sort of pre and post close process and start leveraging AI. And I'll just come back to that last point, and then we'll move back to slides. When we talk about artificial intelligence, when we talk about the things that AI Auditor does, it's a focusing agent. It's using these techniques to do, automatic account classification, transaction classification. It's looking for those unusual things, rarities, all of these things that are based on algorithms that, are really hard for the average accountant to go and write themselves. I mean, sure, go and grab R or something like that, but imagine doing that at the scale of some of your businesses. It's probably not going to work effectively. And then what are you going to do with it? So we've prepackaged as many things as we can think of to really help you through that pre and post-close review process, with even the ability to go in and ask questions of your data, whether that be through predefined review checks that you want to do. So you might have a series of things that you want to go look at. I want to go look at revenue that also has a reversal. I might want to go and see if there's anything where cost of sales is not accurate. So you can actually go through and see, we've got all of these saved units. You can build your own, right? You can configure this solution to go and find those things. But you can equally actually just go to the smart search and you can ask a question of your data, right? You want to see, show, risky transactions that are more than 50,000, right? I can ask that question. The system will go through and respond, and it will bring me back anything that has a total value of that, where it's risky and it's more than 5,000. Comes back with the top item. If you're looking for something very specific, I want to see pick your dimensionality. I want to see this account. If you had division in here or user or anything like that, I want to look for these things. The system will respond and react to you and bring you back to that level of focus. Now, at the end of the day, all of these things are obviously data that you might want to have. It can all come out to Excel. You can do further work with it, all those types of things. But let's just pop back to our PowerPoint just as we start closing up. If you have any questions, by the way, use the question and answer chat window here on the GoToMeeting panel. And myself or the team will get back to you as soon as we possibly can. But why is this all important, and what do we think is the relevancy here? At the end of the day, we know that, or at least just because I've experienced it maybe, the Office of Finance is one of those teams that is typically viewed as a cost center. You really want to be one of those trusted business partners with the whole business. And what ends up happening is you end up struggling with the whole do more with less concept, right? You're trying to be fiscally responsible. You're trying to make sure that, you don't overhire, you don't have huge cost burdens, because, your job is kind of in a function to help the business, but you've got to lead by example, right? What we think happens in most finance organizations is they just don't get to the work they want to do. And so why is AI important, and why is it important in terms of looking at your data? Well, we think that there's a lot of information that kind of needs to be understood about what's going on in that data. When you have hundreds of transactions a day, you think of retailers that might have thousands, if not millions of transactions a day. It's really hard to find the needle in the haystack, right? How do you really justify that time to go and look at all these data points and find the most interesting thing? You don't. As our Chief Innovation and Technology Officer, Robin Grossett, would say, sampling is a human coping mechanism. What he's talking about there is that we typically will filter out data that we don't think is relevant or important, or we search for just the things that we think are the highest probability or have the highest impact, i.e. when people go and look at high dollar value type transactions. So you don't have the time, you don't have the ability to actually sift through all that. Additionally, it's really hard when you think about complex businesses and when you think about the way that bookkeeping is done, maybe between geographies, maybe between divisions, what's normal, what's not normal, right? Any accountant, any finance executive could say, well, that looks wrong to me. And it's going to take you a while to actually dig in and find out if it is or isn't. But what if you could actually ask the system, I want to look at risk by this over this time horizon. What if we could have something that's actually predicting out the trends and showing me where some of those anomalies might be starting to occur in my different ratios, right? And then there's the other piece, which is how do we make the whole team as smart as everyone else in the team, right? And sometimes that just comes down to the ability to actually have a common, view of that potential risk so that people can dig in with easy to use ways. We think that this ensemble really allows you to kind of go full circle there. Why would you look at this? Why would you look at AI Auditor to support you in your business? As I said, pre and post close, it's a lot about timing. If you're in a controller area, it's about making sure that everything processes through, that you do the accruals right, that you back them out appropriately, et cetera, et cetera. But at the end of the day, it's not usually about, did we have someone post something erroneously? Another great example from one of our clients out on the West Coast who, had a bit of an issue where the payroll numbers were all correct, but when we looked at it, when the system looked at it, it's identified payroll as being an issue in a given month. And what we found out was, there was definitely some training that needed to happen because there was a lot of posting, unposting. Now, luckily, by the end of it, the user was able to get all the right postings in and payroll processed, and everyone got paid. And it's a great story. There was no delta. But what the CFO was really interested in and keen about was the fact that it was found and be able to identify, maybe resources in your business that need additional coaching. Maybe there's certain business processes that they just don't know about, right? Why are we posting it like that? It looks different, or the expert score may trigger and say, yeah, that looks just your auditors might come in and ask you about this. Wouldn't you rather be ahead of that? So I think anomaly detection is that first bullet point, right? A lot of things that we can do to help support you there. And then the other piece is raw data exploration, right? There's been a lot of time and effort put into many organizations deploying business analytics tools and software and business intelligence tools and reporting software. At the end of the day, we're typically looking at rolled up aggregated information that may not have all the details that we care about in accounting and specifically in the Office of Finance. How do we get to that? Well, this pulls, as we talked about, all of that underpinning entry-level based data and actually re-rolls it up for you in ways that you would expect, and it starts doing some of the math for you. That starts doing some of those ticks and ties, but it gives you all the ability to dig in and say, hey, show me those revenue transactions in the with these customers that were processed by this user, right? If that data exists in what you provide the system, you're going to be able to explore that data with ease. You're going to be able to go, maybe within 2 or 3 clicks, get to that level of information and interrogate your data in a very, very new and exciting way. Now, I'm going to, also pause here and talk about non-technology, right? At the end of the day, one of the biggest challenges in adopting and adapting AI into your business is the fact that it's more cultural than anything. And what, this is based on one of the HBR posts from last summer. And really at the end of the day, what was great about this is it talked about the fact that it is cultural, right? Typically what we need to do is we need to involve a few more players. Yes, we want to manage things from finance. Yes, we're strong individuals. We want to go out there and we want to do it. But the reality is it requires a lot of different disciplines. Now, to rebuild things that we've built, you're probably going to need some data scientists. And when I say probably, you're going to absolutely need some really smart data scientists. You need some computer engineers. You're going to need all of these things to just build an AI system. But adopting it, you equally have to think about that interdisciplinary collaboration. You need to actually be able to participate in having an open conversation with, the person or the team that's responsible for that part of the P&L or that part of the balance sheet, right? You're going to want to get people who are, more data savvy versus more, strategic savvy, right? If they don't exist and have the same skills. It allows you to be very much, an open environment. By scoring everything the way we have, it literally gives everyone in finance the same point of view. And as you maybe expand that out, again, same point of view. The other shift that you have to start thinking about is moving from sort of that experienced, based leader-driven decision making, like I used to call it tummy feel, the gut feel, to more of a data-driven decision making at the front line. So this means that how do you put people who are out in the front lines, how do you give them the right contextual information and know how to use it? So adding AI to focus them on the things that matter for them and where they're looking is a really great idea. But it also means that let them go and explore it, right? Again, why a type of tool like this is really exciting is it'll show them anomalies in their area. It'll allow them to focus on those items, and hopefully help start supporting decision making based on looking some of those. And then the last piece is really, to try to get out of our rigid processes around, what we've always done, right? In the audit world, they call it Sally, same as last year, but in the traditional record to report or close management process that most businesses have, it's the same as last month. It's not the same as last year, it's just the same as last month. So I guess that'd be Psalm or something like that. But you've got to move out of those sort of rigid ways and actually allow your business to transform and look at risk differently, be able to experiment and understand the data differently. And that's when you can start using AI to its full potential, because its job isn't to replace the individual as much as the World Economic Forum, report would say that, I think the top 4 of the top 7 jobs that will be redundant by 2025 were in the accounting space. I would argue that our skills are going to change, and those skills are going to be augmented heavily by artificial intelligence. So just a segue away from the technology, and just put that in your mind. You're about to embark on something that maybe you haven't done before. Start being a little bit focused and check out building the AI powered organization. Really great read to talk about how you can help scale your business into using AI. And lastly, I mean, I'm all about pictures at the end of the day and showing some interesting things. What I really think is going to change in our world, in our ecosystem of finance professionals, as more of this technology gets leveraged by your external auditors, by your internal audit team if you're not one of those, by your chief risk officer and their whole GRC platform. Really what you want to start doing is making the shift now, right? Stop looking in the rearview mirror so far behind that it's kind of fuzzy and you don't really remember, and start looking at this with more of that proactive risk posture, right? Be able to look at things as you're closing the business, be able to roll it over, do the interim analysis, and sort of look back and say, okay, did we catch everything? And then get better for the next period and get better for the next period. So instead of, same as last month or same as last period, let's get into, what are we going to do next period? Let's get into that proactive stance. So listen, at the end of the day, AI Auditor is a fantastic solution, maybe awkwardly named for some of you in finance because you don't think you do audit, but it's really that investigation tool to kind of get in there and get moving, and allowing you to really understand the data and the complexities of your data and your information, be able to leverage artificial intelligence and leverage anomaly detection in a very, very great way. So, we say here, finding the needle in the haystack. We had a client actually say to us, forget finding the needle in the haystack, let's just burn the haystacks with AI Auditor and the needles will be sitting there. And that's the kind of thing we want you to prepare your minds for. And then finally, to actually then leverage the more complex relationships of your data to actually see how you can predict out at those different ratios and different elements. It's been a bit, a nice action-packed hour from my perspective. I've thrown a lot of things at you. If you have more questions, feel free to reach out to our growth channel. That team is there ready to support you. All they want to do is help educate and put you on a path to maybe use AI in your next sets of monthly closes or different parts of your office finance function. So thank you very much. Have a wonderful morning, afternoon, or evening, wherever you are in the world.